Welcome back to my final morning report charts appraisal on Tuesday the 13th of September with me, Rich Pro Market Analyst at Tech Markets. We're going to look at gold, and we're sort of, again, as with the euro pretty much, we're fairly neutral, I think, on gold in this trading phase that we're going through. Over the last few months we've basically been ranging sideways on gold between 13 figure and 13.75. Not really any major direction within that, a slight sequence of lower highs. But I think, generally speaking, we're trading within a band, and I think ultimately the this sort of pivot around 13.30 has sort of become a bit of a level, and this is exactly where we're trading now. And generally speaking, you sort of say that the momentum indicators are basically neutralised now. RSI 49 basically flat, MACD lines are flat at neutral, stochastics just drifting lower, and you'd sort of say that the last few sessions have been negative and lower, but yesterday's move was sort of basically neutral. Gold rallied on the dollar weakness on Brainard, and that rally came from 13.20. Nothing too significant in terms of the rally, though. We're basically back towards that pivot at 13.30. Which has been in place, and it's all now trading around it. It's sort of unwound some of the oversold momentum, some of the negativity. I mean, if the RSI goes back above 60 on the hourly, then maybe you're going to start to get traction to the upside again. But for now, it's an unwinding move back towards the middle of the band. I think you're basically bang on neutral in terms of your outlook. So this corrective move that we've seen is arguably still in process, but you could also argue that this could actually be a bit small base pattern, and a sort of a decisive move above 13.30 would arguably complete what you could sort of draw in as a head and shoulders reversal pattern. Measure $10 from the bottom to the 13.30 mark, projected higher 13.40, and what's 13.40? That is the next sort of area of resistance within the selling pressure. So it's a mild sort of improvement that we've had overnight, but nothing significant. Basically, just in my opinion, just neutralises the outlook for gold that we're seeing over the sort of medium term. And it could well be seen that this is going to continue in front of the FOMC next week. I see no real reason to sort of break out either way. You might, unless you get an incredibly surprising inflation data on Friday or retail sales, then I can't see any real driver that's going to move gold out of this range near term until the Fed. So I wish you good luck in your trading today, and I will speak to you again tomorrow. Thank you.